What are the surprises out of CCAR tonight?
Well, I brought a prop.
Of course you did.
Hold it up.
And this is Fed stress test, take 8. And we're a couple hours away from that. This is the 8th year of the Fed stress test. And let's pull the lens back a little bit here. This is the most harsh stress test ever. I mean, the stress test has a hypothetical assumption: GDP down 7%, unemployment up to 10%, stocks down 65%. Do you know how many times larger the losses are in the stress test than the current level of losses? Do you think it's like a quarter more or a third more or a half more? 7 times higher. The assumed losses in the Fed stress test are 7 times larger than the current level of losses. This is one big stress test. So after assuming this hypothetical stress scenario, the Fed allows banks to return capital so long as their capital ratios don't dip below the minimum. And the result, which we'll hear in a few hours, we strongly believe will be record capital return by U.S. banks, even with...
But how will that compare to investor expectations for the individual stocks?
So, I mean, we will have fireworks. It's like, you know, saying, will the fireworks be 25 minutes or 20 minutes? I mean, we're going to have fireworks. It's record capital return. We think it's splitting hair. I mean, if you look at the dividend yield adjusted for buybacks at banks, it's at an all-time high after adjusting for the 10-year Treasury yield. So if you get a little bit less, we expect 18% increase in capital return. Is there a chance it could be 15 or 16%? Could it be 20%? We're still in a good range. We still have fireworks.
Why are so many of the systemically important banks in the world down 20%?
So what we have here is a trifecta of bad news. You've had a flattening yield curve over the last 3 months. I do think that some algorithms kick in with that. The second thing is the stress test was overly stressful when it came out last Thursday night, and it concerned people. And the third factor would be the trade issues. They didn't matter until they mattered. Having said that, if you go back in history, looking at the flat yield curve, which we do think it's driven banks lower recently, you go back to the 90s, banks outperformed, to the 60s, banks outperformed, and frankly, since the election, banks outperformed. And for some of the same reasons, we think banks will still outperform over the next 3 years. Just like the 90s, you had better efficiency. You have better efficiency now. Just like the 60s, you had an asset remix.
Did you think that the banks would have outperformed the markets year to date? I know that's a very short time frame, but the stars seem to align for this sector at the beginning of this year. I mean, rising interest rates, right? Supposedly increase in business activity.
The economy's getting better.
Right, the economy's getting better. I mean, all these things, lighter regulatory touch, and still we didn't get the outperformance so far this year. So why should we believe that they're going to do any better, even when considering that they had everything at their back at the first half?
So, Melissa, another way you could phrase that is, you know, Mike, you've been wrong this year. Why do you think you'll be right now? Which is fair, because I've been on the show here saying I think banks...
And it's not just you, to be fair. I mean, investors, a lot of other bank analysts.
Consensus. It was
consensus. It still is consensus.
A beautiful tailwind as rates rose for financials.
I'm happy to own the fact that, you know, we thought banks would outperform. They've not outperformed. The reason I'm so willing to embrace that, not only because it's true, it's because we think over the next 3 years, banks will outperform. Sometimes you have issues and stocks go down. You go, uh-oh, I have to reevaluate. No, things are coming in pretty much as ordered, except for the flatter yield curve, which maybe that could hurt 5% to earnings or something. That's not make or break. So we think this is a lot of noise, a lot of randomness. And we think when you get these stress test results, you get the earnings coming through over the next year or so, banks will outperform.
And you like these little tiny ones, JP Morgan, Citigroup, and Bank of America. Those are your top picks, Mike.
Right there. Thank you for the second half playbook. Thanks, Mike.
Thank you.
Mayo from Wells Fargo.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.